Hi everyone and welcome to the Octa FX live trading session. My name is Ambrose Ebuka, and before I go into further details of this live trading session, you can go ahead and let me know your name and where you're watching me from in the comments. And you can also go ahead to tell me if this is your first time participating in a live trading session or a webinar, an online webinar hosted by Octa FX. In live trading sessions like this, we look at different ways to analyze the markets, different systems and approach to the market, and would also look at news and understand how the news impacts the overall direction of the markets. We'd also look at methods of opening and closing orders in real time, steps of trading the market, which is the framework that I usually discuss. And we'll have a section for questions. So if you have questions, you can always go ahead and somebody's saying he's not hearing. Let me know in the comments, guys, if you guys can hear me. Let me know if you guys can hear me in the comments. Okay, so we're going to have a different section where I answer your questions. So you can always type your questions in the comments. I'll go through to answer them. And in the course of this trading session, if you have pairs that you want me to analyze, you can always write them down or type them down in the comments, and I will check them out and analyze them as well. Sadiq from Nigeria, welcome. Harrison says it's his first time and he lives in Abuja, Nigeria. Welcome, Harrison. Williams, my second attendance, welcome. Praise is saying I don't know anything and it's my first time. Well, it's a good thing you're here. It's amazing that you're here. You're at the right place to learn about the markets and how to analyze the market. So I strongly believe that by the end of this live trading session, you will have an improved knowledge of the systematics of trading. Massive welcome, guys. Welcome every one of you. In the meantime, you can also share this link with your friends, the live link with your friends, so that you can learn and earn with your friends as well. All right, guys, we're going to talk about the steps to trading, the framework to trading. And I'll just give like a briefing on that because it's something that was emphasized on in the last live trading session. And the first step would be to check the news, to check the economic events of the day. And what this basically means is that when you wake up or as you start your day, it's not really ideal to just go straight to the charts and start buying or selling. You want to know what's happening economically. You want to know what probably the Fed chairman is going to say, or if there's any speech coming out from any member of the board of governors. You want to be prepared for the day, right? And the economic calendar can help you do that. This is the Octa economic calendar, and you can get it from the website at octafx.com, analysis and education, and then you come down to analytics, economic calendar. So you click on it and then it takes you here. Okay, I personally like to focus on high impact events alone. So I'm just going to check this. But if you're a beginner trader and also just to get that additional knowledge of these economic events, you can check that box. For example, we had speeches by board of governors. You can see them here. And I'll go to the charts, later on in this session. I'll show you guys the amount of volatility this speech brought to the gold chart. And this is a medium event, right? So just for that extra knowledge and to be aware of, some economic events that will be happening that are not labeled as high impact events, you want to also add medium impact events as well. All right, we're going to take the high impact events. The first one we had today at 2:30 a.m. and very important, guys, you should also check the time zone. Very important because you could have let's say, for example, you have Midway Island somewhere here and you start to expect the news to be out at this time zone and you get to miss out on some of these important economic events just because you made a mistake with the time zone. I've actually experienced that before. So when you use the economic calendar, the Octa economic calendar, you can change the time zone to the one that fits into your country. Okay. All right, so we had the retail sales, the Australian retail sales, which is released by the Australian Bureau of Statistics, Labour Statistics. It was released by 2:30 a.m. And if you don't understand what retail sales are, they are a fundamental economic indicator that we use in trading. And retail sales measure the total sales of goods and services by retailers to consumers within, a country or a specific area. And these sales numbers are very important for us as traders because they can give us an insight to an economic general health, the country's economic growth or instability, whatever it is. It gives us an understanding of the overall health, the overall stability or instability of a country's economy. And it can also influence the value of the domestic currency of that particular country. Okay, so very important that you understand these events, what they mean and how they can impact the currency that you're trading. If you want to get a brief definition, you can also click on any one of these events and you can have an understanding by reading this definition that has been provided by Octa FX. You can see here, positive retail sales figures can be seen as an indication of a strong and healthy economy. And if the retail sales data disappoints or if it falls, then it might be seen as a symptom of economic weakness. So you can just take advantage of this economic calendar. It was released by 2:30 a.m. and we had an actual report that was less than the previous reports we had on the Australian retail sales. We'll go to the charts and see how that impacts. I don't think it brought about a good number of volatility to the Australian dollar chart, but we'll check that out and observe that as well. We also had German CPI. Month over month and year over year. And if you don't know what the CPI is an economic indicator that measures the average change in prices paid by consumers for products and services over time. Okay, and as Forex traders, investors generally, we closely pay attention to CPI and other economic indicators because they help us make informed decisions about our currency trades. And then we also had by 1:30 p.m. today, analyzed GDP for the US dollar. And GDP is a major economic data that measures the total monetary worth of all products and services produced in a country or a nation or an area over a specific time. And this can be quarterly, this can be annually. It's a key indication for a nation's economic health and growth. So it's important that you also pay attention to gross domestic product and GDP as well. And you can see that from the reports that was released, we had the exact same release reports. Excuse me, guys. The exact same release reports from the previous and the forecast as well. And I'll go over the chart and show you guys how the US dollar market, which is, currency pairs that are, or currencies that are paired with the dollar, how they reacted. Major currencies like EURUSD, GBPUSD, gold as well. I'll show you guys how they reacted to GDP release. And we have the Fed speech coming up by 9 p.m. today. And it's important to pay attention to the Fed chairman's speech, Jerome Powell, because his words can have an impact, a big impact on the financial markets and the overall US economy. Now, as traders, you should have it at the back of your mind that the Federal Reserve is a key player in formulating and carrying out monetary policy in the US. And this also covers decisions that regards the interest rates. I know sometimes you hear about interest rate hike and, how the Fed is hawkish and dovish. All these things revolve around economic events and understanding what's going on economically in a country. And as traders, you want to get this data because they can give you an overall direction of the market in the long run. Okay, so we've reviewed the economic calendar for today, and I've also shown you guys how to read this. And like I said, you click on it to understand if the results are bullish or bearish for that particular currency. And you don't just take that and go straight to your chart and start buying. We'll go straight to the chart right now and I'll show you guys how to combine your fundamental analysis with technical analysis, identifying areas of support and resistance, identifying key levels that you can take comfortable trades from. All right, let's go to the charts. I said, guys, I'll just brief you guys on the framework or the steps to trading, and I'll just put it on here so you can always see it and understand the steps that we're taking so that you're not confused. So first you check the news, which we already did, and then you want to understand market structure. You want to identify your key levels. You want to identify your entries. You want to determine your exit points, because for every trade you execute, you should have a level where you want to close your trades in profit or halt further advance in drawdowns or loss. And then you want to apply proper risk management strategy. Okay, just increase it for you guys. That's too big. I believe it was quite visible. Okay. So in the last live trading session we had, we looked at gold and the possibilities of gold breaking this yearly high. Remember the last time, PHY here means previous yearly high. So the last time gold was at this point was in March. Yeah, I think early March this year. And we considered the possibilities of gold, making a retest at this yearly high and breaking above it, which it did. And this is on the daily time frame, guys, so you understand. So let me go to the 4-hour time frame. So you can see that gold has been the dollar index rather has been trending to the top side. We've broken out from this major resistance level from March. And what are we doing? We're coming back to make a retest. Now, what I want you guys to understand about retest, breakout on retest, is that for you to have a confirmation on the initial direction or the future direction of an asset, whatever asset it is, it can be gold, it can be NASDAQ, it can be GBPUSD, whatever asset it is you're trading, for you to have an understanding of the future direction, because obviously you understand the initial direction, which is an uptrend. We're seeing the market create a series of higher highs and higher lows here on the dollar index, right? For you to have an understanding and a good amount of confidence that this is going to continue to the top side and the strength is going to be maintained, the bullish momentum is going to be maintained, then we want to see rejections at this level. We want to see the sellers get rejected at this level and buyers take over and continue to move to the top side. I'm going to highlight a swing high, another area on the dollar index market or the dollar index chart on the 4-hour time frame, where I believe that the market could be headed to if we have a sustained break above this yearly highs. Okay, you guys need to understand that the market tends to move like a magnet, tends to respect areas of supply and demand, oftentimes than not. Just zoom in for you guys. So the dollar index is still very strong, still pretty bullish. I think that for this bullish run to continue, which is what the market does when it moves, when it makes an impulsive move, when it trends to a certain level, it starts to retrace or it starts to make some correctional moves, and it can either continue in the initial direction or make a total reversal to the downside. So for the dollar index to continue to the top side, I believe we're going to see some rejections around this area, and we're also likely to see some rejections around this area on the dollar index before it continues its upward trajectory. So these are key levels for the dollar index. Let me just map that out. These are key levels for the dollar index here. Here. And also, let me drag that down as well. I think we should connect it to the side. So when you have markets make huge trends, serious trends to the top side, it doesn't just move upwards continuously, right? A trending market is made up of a series of higher highs and higher lows. And these higher highs, when the market makes a higher high, it has to retrace or make a correctional move to make a higher low, right? And that's what I think the dollar index is doing right now. We're going to see some consolidations around this point, around this area. Remember, guys, we have the Fed chairman's speech by 9 p.m. And yeah, we're going to see how the dollar index reacts to that. But I believe we're going to see a pullback, some rejections, and then, get to see the buyers take over and continue to push this market, or the dollar index market, to the top side. And you know what happens when the dollar index is continuously strong? It means that if you're trading EURUSD, if you're trading GBPUSD, you're trading gold, you're going to see how those markets would react and potentially fall. Okay, if the dollar is stronger than pound, dollar is stronger than gold, as you can see here, you would see that these markets that are paired with dollar would also react to the strength of the dollar. So guys, taking note of this level, 105.7, which is, I think I should just zone it out for you guys. Already done that anyway. I think I should zone it out for you guys. Yeah. So we have 105.7 to 106.15. And on the downside, I think that we're going to have support around 105, 104.5 levels. So I'm also going to map that out for you guys as well. Because I believe that if this market is to come down, we're going to see some retest at this key level. We're going to see some retest at the 200 period moving average on the 4-hour time frame as well. I think that the dollar market is going to find support at that level, these levels that I've just mapped out now, before it continues its upward trajectory or make a break and potentially push to the downside. Okay, but currently the dollar market is at a key level, making a retest. It's still bullish. So if you have trades open on pairs like Aussie dollar, for example, or pound dollar also, you can still hold your trades and put your stop loss into profits, because we don't have a clear pullback yet. We're just seeing a retracement and a reaction to this key level. We could have another higher high created from this point. We could have the market come down here and push back up to create a higher high. But I strongly believe that the dollar index is going to react to this level. Okay, let's look at Australian dollar and the US dollar. Remember, guys, if you have pairs you want me to analyze, you can always type them in the chat. I'll check to see the pairs. And if you have questions, you can also ask your questions in the chat. We're going to have a different section for question and answer. And I think I'm also going to ask you guys some questions just to be sure you're following. So pay attention, guys. All right. We had these key levels mapped out last week, and quite a lot, you know, supply and demand levels that we mapped out. We've seen the market react to all these levels. And another thing I can do is to draw my Fib, just so that you guys can understand why this is a key level for the Aussie dollar market on the 4-hour time. We're seeing that the market has tried about 4 times to break above the 61.8 extension level, but it couldn't. And we're just seeing the market consolidate and trade in a range, right? You can also call this a rectangle pattern on the Aussie dollar. Okay, and just like I said the last week, when the market moves in a pattern like this, it's called consolidation. When the market just moves like, nope. Yeah, so when the market trades in an apex like this, or the market just does something like this, it's basically consolidating, and there's always going to be a breakout. The breakout could be to the downside, the breakout could be to the top side. And if you trade ranging markets, then you can always take advantage of these levels, the supply and or support and resistance levels, you know, see how the markets react to these levels. And if you're trading support and resistance, or trading based on, you know, key levels, trading, let me just zoom in to show you guys what it looks like. Trading key levels, trading support and resistance levels basically mean you're going to be observing what the market does when it gets to key levels like this, right? And that's if you trade a ranging market. Now, to do that, you would need the higher time frame, and you would also need the lower time frame, right? Now, the higher time frame is going to tell you, look, massive rejection, right? Massive rejection here, rejection here. We're not seeing any follow-up. We can also see a rejection here, rejection. This was a fake out, and I'll also show you guys how to avoid fake outs like this. So you use the higher time frame to identify this rejection, and the lower time frame shows you the momentum you need to execute that trade. So if you go to the lower time frame, like the 15 minutes chart, let's just go to one of this. I'll take this out for a minute so you guys can see clearly, right? So let's say you just wanted to trade the bounce, and you've seen that massive rejection. You've seen the emergence of a bearish engulfing candlestick. You can see how this candlestick shows you bearish momentum, right? You've seen another rejection. So you already have this clear indication that the buyers are strongly rejected. Why? Number one, you have the key level that the market failed to break above. As you can see, the market created or formed a doji candlestick. You can see here, indecision candlestick. And what happened? The sellers took over, pushed this market downwards. We also had a bullish engulfing candlestick that shows you momentum. Market tried to pull back. You also saw another rejection here. This is an indication to sell or short the Aussie dollar market. Another beautiful indication, actually, if I was going to be on this trade, I wouldn't take it here, but I'll take this trade here. Just because I like to trade the breakout of the moving average. I like to use the moving average as my final confirmation. Okay, and let's say this would be about 30 pips from the break. Okay, 25 pips. Or if I'm to scale it even to the top, that would be like 35 pips. Yeah. So if I was on this trade, what I would actually wait for would be, I've seen the rejection here, the break below this minor key level that I've indicated from the past here. If I trace it back to the past, you see where the market made retest. That's why that's a key level. We've seen the market push back to retest that minor key level, pull back to the downside. Now, the reason I said I'm going to trade the break of the moving average is because I don't want to get caught up in a bounce, in a moving average bounce. I don't want the market to just push back here, bounce off at the moving average and continue to push up. Right? So I need to be comfortable when executing this trade. So what I'm going to do is to be patient enough for the market to break below the moving average, give me a retracement. Now this retracement is also a retest at previous support, as you can see here. Doji candlestick indecision. You can see that there are no bullish momentum candlesticks here. No bullish momentum candlesticks here. And what happened? The sellers took over. You execute your trade, and the stop loss will probably be set. Or this for buy at the high of the previous swing candlestick, as you can see here. Right. So if you want to do like let's say you want to do a 1-to-1 and you want to put your stop loss at the swing, you can use the previous swing high, which is here, and do a 1-to-1. Just like that. Just like that. So now we have multiple confirmations. You have the rejection at this major key level from the higher time frame. Remember, from the higher time frame, we had to go to the higher time frame to get that key level. That key level was from the 61.8 pip extension. It's also a resistance, a major resistance on the Aussie dollar market as well. Now we have two confirmations already, or confluences already, and then we're seeing this rejection. That's 3. We've seen the market react. We've seen it pull back to the minor key level, still rejected, got to the moving average, the 200 period moving average on the 15 minutes time frame, broke below it and pulled back to make a retest at this previous support. No bullish momentum candlesticks here. Shows you that the buyers are not even, we're not seeing any candlestick that closed and engulfed any bearish candlestick. So the momentum is not here on the buyers. Momentum is not here on the bullish side. We saw momentum on the bearish side. Take the trade, right? So you're getting your confirmation based on price action and candlestick confirmation. And then you're trading the zone. Okay, so based on your risk tolerance, your stop loss can be here, but it's ideal to go for a 1-to-1 at least. You know, if you're going for like a 2-to-1 or a 3-to-1, that's not really a moderate risk to reward, because you're going to be risking more than your reward. Okay, so 1-to-1 is good, 1-to-2, and if you're going to risk 2%, then you should be going for 2% in reward or 3-4%. So let me know if you guys understand the gold or understood the Aussie dollar analysis. Okay, I'm seeing EURUSD in the charts. So let's check out EURUSD. So remember, you want to understand market structure, right? And to understand market structure, you go to the higher time frame. The higher time frame is always going to give you overall direction, guys. Overall direction, and that's what you need. You need to know the overall direction, and then what you need is for the lower time frames to actually move in that direction, and you just join the trend. You'll be more comfortable trading in the direction of the trend than trying to catch a reversal. So when the market is making reversal patterns, then you have to be patient enough for those patterns to form before you start to take those trades. Okay? Just like I said, in correlation to the movement of the dollar index, you can see that the dollar index was trending upwards and the euro dollar market is trending downwards. It's a currency pair thing based on quotes currency, you know. So the euro is obviously going to react to the strength of the dollar. And if the dollar continues to stay strong, the euro is going to just continue to dip. I think I should just go to the daily first so I can show you guys how this lines came about. All right, so we're saying that the euro dollar market has been trending downwards. We've seen emergence of multiple lower highs and lower lows, and we've also seen that the market is even now trading below the 200 period moving average on the daily time frame. We've seen that the euro dollar market has broken this strong trend line support as well, broken below the 200 period moving average, broken these barriers of the key levels. And that's why it's important to have your key levels in place, because if you notice, the market is just reacting to these key levels that will be set from the past. And the euro dollar market is currently trading at, or making some recoveries at this previous support that we can trace all the way back to January earlier this year. Making some recoveries. I'm going to go to the lower time frame. I just wanted to show you guys how we came about these lines and all these horizontal lines you see and the trend lines. Just going to take this off. I'll go to the 4-hour time frame. Just zoom in a bit. So currently the euro dollar market is making some recoveries. But this doesn't signify, bullish momentum, right? Just like I said, the market has been creating a series of lower highs and lower low. And we have some important areas of resistance like here and also a minor one at this point as well. So the euro dollar market could still push further downwards. And if you want to change your bias on that, if you want to look for buy trades on the euro dollar, then there's some areas where you want to see the euro dollar market break out of, which is first an area like this. So if we have a break above 1.07, a sustained break above 1.07, then we can start to brace up for a change in the overall direction of the euro dollar market. The reason why this is yes, it's a cycle level as well, but the reason why this is an important area that I want the euro dollar to break out from before I start buying is because we have we're going to have an alignment here. We're going to have the alignment of a minor key level, a major key level, and also the 200 period moving average as well. Okay, and what that would basically mean is that the euro dollar market has trended to the downside, broken all these key levels. It's come down to make a retest at this yearly support, because this support has held since January. So it makes it very strong. It's not a kind of support that will just boom, break below and just continue to go down like that. We need the market to react to this strong support level, just like it did here. January reacted, came back again that same January to react, came back in February, March again, and now we're at that support in September. So we're going to see how the market reacts to this strong support. If you get a break below and probably a pullback or a retracement to retest, into this zone, then we can be bracing for further downside on the euro dollar. But I really think that we're going to have good recoveries on the euro dollar. I think that the euro dollar is going to actually rally up to make a retest at this level and also at this level, and that's what we want to pay attention to. Because if you have bearish rejections at 1.065, then we want to join the sell and continue this downtrend. But if we have a nice break above this level, it's also going to be a break above the 200 period moving average, and then we can look for buy opportunities at the retest. So let me know if you understand. Cosmo Blink, you wanted the euro dollar analysis, so let me know if you understand. So just to recap the euro dollar, we're currently sitting at major yearly support. This support has been holding since the start of the year, and it makes it a very important and strong support level. Okay, if we get to break below it, a sustained break, I'm not talking about something like this, like fake out like this, or something like, yeah, that didn't break out, yeah, something like this. No, we need a sustained break below this strong support to continue to trade the euro dollar to the downside. I strongly believe that euro dollar is going to make some recoveries before it continues to push back to the downside. Let me put up my RSI and see what it's saying. Yeah, I think that the euro dollar is going to try to test this level and potentially this level before it continues to the downside. But overall direction on the euro dollar is still bearish, guys. We've not changed the trajectory. We're still headed downwards until we get to break above this key level and have that break sustained, and then we can start to see some change in direction on euro dollar. Visak wants us to look at XAUUSD, which is gold. Okay. Let's briefly look at gold. Guys, gold has been amazing. Gold has been amazing this week. Gold has been amazing this week. Let me just zoom in a bit, take this off. I think we're still going to need that, so I'll just save it there. I'm pretty sure that you guys can see the importance of having your levels mapped out, your key levels. For example, we have this strong trendline support, you know, sitting on gold, and gold successfully broke below that to make a retest that way. And it's obvious because when you have your levels mapped out from the past, you just, you know, extend it to the future. And now that we've had this break below the trendline support, below this key level here as well, the next place you can see gold headed is here, right? Now we had the break, we had the retest. If I go to the lower time frames, I'm still going to see some candlestick momentum that can give me indication of, you know, sell opportunities on gold. Yeah. So you can see that here. You can see the rejection. You can see the next candlestick was totally bearish, no bullish momentum. You can just see it from the candlesticks and how they close. So we had the breakout to the downside, the retest. We saw the rejection, the buyers were rejected, we saw the emergence of the bearish candlestick that closed totally bearish. We saw another one that closed totally bearish, and another one as well. These are momentum candlesticks, right? So now you have your break below this, your key levels, the trend line, the minor level. We have the break below this major level here as well. We have the retest. We have the candlestick showing you on the lower time frame that bearish momentum is kicking in. And what do? You can still see that the gold market on the 15 minutes time frame started trading below the 200 period moving average. And you know, with moving averages, when the market trades above it, you can call that an uptrend and start to trade the bounce. When the market trades below it, you can call that a downtrend and start to trade the bounce as well. There are two ways to trade the moving average: by trading the bounce or the break and retest. So gold successfully broke below all that, came down to this level, broke below as well, pulled back. We had the news released today and gold reacted nicely, still broke to the downside as well. I'm just going to extend it to previous times to see if we have any major level that gold is trying to test. Yeah, so I think the next major level we have is here. But before gold gets to this point, I expect to see recoveries, and I'm talking about 100 pips, 200 pips recovery to the top side if gold is still going to continue to the downside. Okay, so yes, gold is bearish, but right now I'm going to say it's a bit late to start hopping on sell trades on gold right now. Let me just put up the RSI as well. RSI is up at 13, which is very oversold. Okay, so gold is still bearish, yes, and the next place it's going to get to, or yeah, the next place it's headed is, it's going to zoom this out a bit and extend this as well. It's 1808, which is about 600 pips away from current market price. And I expect gold to make some recoveries and push back a little bit to the top before we start to see continuous movement to the downside. So I expect gold to just rally to the top a bit and just consolidate slowly to the top. Where it continues to move to the downside. So if you're on sell trades on gold right now, you can, close some profits or put your stop loss into profit. If you're looking to sell gold, I would say just be patient for the retracement or the pullback. And then you can start to look for sell opportunities. Gold is still bearish, but I expect some recoveries in gold. I expect gold to rally up before it continues to push to the downside. I'm talking about seeing something like this. And then So let me know if you understood the gold analysis. Let me know in the chat if you understood the gold analysis. Andrew Dave wants us to do GBPUSD. I'm going to try to be very brief. And last week we looked at the possibilities of, you know, pound dollar getting way down to 1.2150 levels, and it did exactly that. Got down to this point before we started to see some recoveries to the top side. Still a key level that the pound dollar is recovering at. I still expect this recovery to linger a bit and just rally to the top for a while before we start to see pullbacks to the downside or continuous recoveries to the top side. So what you can, let me just go to the daily time frame. What you can do on pound dollar, 1 second guys. Yeah, pound dollar is reacting to this key level like we said last week. So what you can do on pound dollar is to see if you can get a nice break below this key level. If you get a break below this key level, then that's sustained bearish momentum. That's our indication to continue to sell, right? And we'll start to aim for these levels. Okay, that's what we want to look out for. But I expect some recoveries on pound dollar. Let me also check the RSI on this one as well. We're up at 49. And if you notice on the 4-hour time frame, we're already seeing rejections. The buyers have been rejected. So like I said, if you get a nice and sustained break below this key level here, we want to take advantage of that. And not just that key level, but also this support that has been formed here. That's when you want to go short. Also, guys, pay attention to the candlestick momentum. So you don't get caught up in, you know, wicks that break out or shadows that break out and then the market goes back to hit your stop loss. So you want to see momentum. All right, guys, we've come to the question and answer section of the live trading session. So if you have questions concerning this analysis or your own personal analysis or trading in general, you can let me know in the chat and I'll try to answer some of your questions. Try to answer all your questions. Right. Norman Khan is saying, I'm from Pakistan. I want to be a good trader now. I'm a beginner in Forex, I guess. I want to be a good trader. If you can give me all your course, I pray for you. God bless you. Well, that's the essence of the Octa FX official YouTube channel. There are videos, there are explanatory videos, live trading sessions, market analysis, day to day that can keep you updated and keep you informed about, you know, what's going on in the market, about how you can refine your trading strategies and abilities to stay profitable in the market. So I'll suggest you take advantage of, you know, these videos, the explanatory videos, and on your own, you don't just watch these videos and you know, expect the knowledge to just sink in. The knowledge sinks in with practice. Okay, so you can also get an Octa demo account and practice what you've learned, and over time, when you're confident, you can move to a live account. What is a higher high and a higher low? So these are terms that we use to identify uptrends, right? Let's see. We have a clear chart. I think we have one here. All right. I'm going to try to write a H here. I don't know. That's going to be a smooth one. It wasn't a smooth one, but yeah. HH, higher high. Just try to modify that. Didn't work. But I guess we'll just use the text. Then we also have higher lows as well. So by higher high, we mean a high was created, a low was created, right? A new high was created, and this high is higher than the previous high. So it's called a higher high. After this high was created, a new low was created, and this low is higher than the previous low. So we've called this a higher low. Now, if the market continues to create series of higher highs and higher lows, that's an uptrend. And you want to take your trades, you want to look for buy opportunities at the higher lows. The same thing goes for lower lows and lower highs for a downtrend. To have a lower high here, lower high here, and then we can also have the lower low here. So what we basically mean by this is that the market created a high and created a low, right? I think I should just, yeah, created a low, created a high. This low is lower than this previous low. This high is lower than this previous high. So we call it a lower high. Now, if the market continues to create series of lower highs and lower lows, then it's going to be a downtrend. And you want to look for sell opportunities at the lower highs. Okay, so when you hear buy low, sell high, you can use the lower highs and lower lows to identify good opportunities, good setups, good prices where you can buy and sell. Because if you're just going to buy when the market is always low, you may never know the lowest point, right? And that's where key levels come in. Okay, so I hope you understand that now. Someone's asking what you should expect on EURUSD. Is it a downtrend or an uptrend? EURUSD is still a downtrend right now. It's just reacting to major support on yearly major support. It's just reacting to that. If you get a break below, then we continue to trade euro dollar market downwards. When the market reacts to key level, you want to pay attention to what it does. So we're going to just keep an eye out on EURUSD right now and trade in the direction of the market. It was a really amazing live trading session with every one of you. We're going to do this sometime again, and I want to thank you all for participating, and I will see you guys next time. Bye everyone.